Thank you, Carl and Sarah. Welcome to the Halftime Report. I'm Frank Holland in for Scott Wapner. Front and center at this hour is the rally running on fumes as we gear up for big tech earnings, and we're also looking at potential new signs of fraud beginning to emerge. Our investment committee is here to debate everything and much more. Joining me for the hour, we got Josh Brown, Joe Terranova, Stephanie Link, and Citi Wealth's Chief Investment Officer, Kate Moore. But first, a very quick check of the markets. You can see kind of a mixed picture right now. The Dow just fractionally higher, the S&P fractionally lower. It's really the NASDAQ under some pressure, down about 0.5% after a multi-day winning streak. Chip stocks really weighing on the index. All right, Josh Brown coming from the office. Put this in perspective for us. Again, market's pulling back, but the S&P and the NASDAQ still both very close to their all-time highs, probably about 1% away, even with the slight pullback today. And we also got to keep in mind, today's pullback is from NXP, which really focuses on the auto business. It's not necessarily part of that AI trade. So I want to get your take. Are we making too much of this? Is this just, the market's trading at highs and a natural pullback, or is it the sign of something else?
I think you want to pull back. If you're a bull, you're not looking for vertical lines straight up. I think if we're really in a healthy uptrend and we're in a new cyclical bull market that began on the heels of the trade war blow up in April, what you're not looking for is another 20% of upside in the next 6 weeks. I mean, you could want to see that if you're, I guess, a swing trader, because you think you're going to scalp, some more profits and some momentum stocks. But if you're a serious investor and you're not a trader and you're focused more on the long-term health of the bull market, a pause would be absolutely fine. I'm sure everyone on the desk would agree with that. One of the things that you want to not do, and I wish somebody had told me this when I first started investing, is not extrapolate sideshows into as though they are in the center ring of the circus. So there's a freak show happening outside the tent, the main tent, right? Kohl's is up 37% today. The stock opened up 82% today. On Friday, it was a $9 stock. Today, it's 14. It opened at 19. Just outrageous, right? I mean, great for people that own it. Congratulations. No disrespect. 45% of that stock was held short, okay? 87 million shares traded hands by 10 a.m. Not normal. Can only happen in the retail fever swamps of Reddit. And we've seen this before. There's another name just like this, Open Door, which was a former SPAC, now a meme stock. Heavy retail favorite. All the platforms say this thing is going crazy. It's up 200% open in the last week. Also, completely abnormal, absolute freak show. And again, congrats to the longs. What you don't want to do is look at that activity and then tell this story where it's indicative of a toppy market. Because if you do that, you'll miss the bigger story, which is earnings growth. And earnings growth specifically in the technology space. Kohl's is $1 billion market cap. It could disappear tomorrow and it wouldn't matter. That's not the thing that you want to focus on. You want to focus on the leading stocks in the market, what I call the best stocks in the market, and then understand why they're going up. And to Stephanie's point, the backdrop is a growing economy, sure, decelerating somewhat. We sort of all knew that would happen. But in the end, you have economic growth, and you've got earnings growth in the biggest, most important companies. And that is the real show. And that should keep you on the right side, even if we get a 5% pullback, which, once again, we welcome it with open arms.
All right, Kate, I want to come over to you. Yeah. Is Josh right? Are these some of these moves, when we're talking about these meme stocks like an Open Door and a Kohl's, are these just sideshows and the real story has been the secular bull market that still has the potential to continue? And, of course, we have Alphabet earnings coming up tomorrow.
Yeah, I'm much more focused on what's going to happen with the mega cap and big tech earnings. And I want to kind of highlight something that's been coming up in this conversation so far, is that some of these names are extremely well owned right now. And watching the price reaction after they report is going to be critical as to gauge of sentiment. Because we saw this with bank stocks reporting, right? Some of the most widely held and well-loved of those names didn't respond as well in a price situation as you might expect from their results. So I think that'll be a sign for fatigue or no fatigue in the market in the near term. And as Stephanie pointed out, August and September, sometimes into early October, is a more heightened volatility period. More generally, it's not going to be a straight line up, as Josh was saying. So, from this environment, I'm watching positioning very closely and the market reaction to earnings, less so the meme stocks.
I think earnings season is silly season, though. because good fundamentals, even if they are over-owned and the stocks fall, that's your opportunity to buy. And that's what I will do. And I always have a little bit of extra cash around earnings for that very reason. If the fundamentals are there and the estimates ultimately are going higher, and you mentioned the banks, earnings are going higher, right? And the stocks fell, that's your opportunity, I think.
It should be an opportunity.
You know, before we get to earnings, let's focus a little bit more on what you're calling the silly season right now, especially with some of these things that Josh is calling a sideshow. Joe, I'm going to bounce this off you. Piper Sandler out with a note saying in part, time for a little risk on rebalancing, higher beta names at risk. Important to note, yesterday, the SPHB, the higher beta ETF, hit an all-time high. Names like NVIDIA, a lot of other chip names. They go on to say recommend taking profit on stocks that have benefited the most from the relief rally since early April. Talking about, again, those higher beta, lower quality names that have seen huge multiple expansion. What do you make of that take? I mean, can you ride some of this? Maybe not a swing trader, but just for a short-term pop, or is it just time just to kind of get out of these names?
I think it's plausible. I mean, the market has had such a dramatic recovery. Take AMD, for instance, talking about stock that's up 100% from the low. So it's in April, rather. So it's plausible that these stocks have a degree of exhaustion. What Kate is talking about, what I referenced in my opening remarks, that's an example of what we call good news, bad price action. What does good news, bad price action mean to you as an investor? It probably means that you just need to understand that your expectation is over the coming course of time that the equity that you own moves sideways to potentially lower. It's not a call to action more than anything else. It's really a call to, you have to exhibit some patience and just ride out what potentially might be a time correction. So I don't think you could rule out anything after the dramatic recovery that we've had since the lows in early April, when you're talking about some areas of the market that are up 75, 80, 100%. They could clearly pull back very obviously. What do you want to do? You want to focus, as Stephanie said, on where you see the good fundamentals in the market. I am not suggesting that you want to go out and buy companies that have the extreme valuation and are long duration assets and are hoping to grow at some point into an extreme valuation. I don't think that's the area of the market that you're going to find the comfort in right now. And I think there's enough opportunities, and we see that represented in the financial sector with a lot of mid and large cap, where you could find companies that have a decent valuation and they're actually, for the first time, giving you the growth.
Are you also excited about the idea of deregulation, acquisitions happening? Today we're talking about Goldman and Northern Trust. Last week it was Huntington.
Let's talk about the financial sector for 1 second. So in the JOT ETF, we have a 30% weighting to financials. And it's really rooted in the belief that fundamentally you've had the combination of a revival in earnings growth, M&A, trading activity, there's strong engagement in trading activity, and then you have the regulatory relief. You add upon that the premise that now you have this technical momentum. So our top performing names, Interactive Brokers, best financial stock we own in the ETF. Charles Schwab, another name. New Holdings, digital banking company down in South America. JP Morgan, obviously performing remarkably well. Northern Trust, Bank of New York. So the financial sector is giving you the growth opportunity. And to Kate's point, when you're thinking about positioning, yeah, positioning could be a little bit extreme. There could be a need to work off some of that positioning. But now Stephanie's going to like this. When you look at valuation, look at the 11 S&P sectors. Where do financials score, even with the rally that they've had? They are the third lowest valuation out of 11 S&P sectors at a current PE of somewhere around 18.5. That's still cheap enough to get me excited and keep me anchored in the sector.
Yeah, by the way, just to your point, Bank of America out with their client flows, big financial inflows amid bank earnings. So a lot of other investors going into the banks. Speaking of, Stephanie Link, you have a move in the financial space.
Yeah, what we were just talking about. Wells Fargo, they had reported a good number. They beat earnings. They had good fee growth. Provisions were under control. Credit costs were low. Efficiencies were in line and strong and good. They're buying back. They have a buyback program of $40 billion. That's 15% of the market cap. And the stock fell 5% on the day. So I actually added to it. It's now my largest U.S. financial services holding. It trades at 14 times earnings. 1.6 times book is not exactly cheap for them. However, with the asset cap lift, I think your ROTCE goes from 15% to 17%, and that's a very good thing for multiple expansion over time. So I used earnings season, silly season, to buy best in breed.
All right, you also own PNC, made some news today announcing a strategic partnership with Coinbase. Just while we're on it.
I don't own PNC.
Oh, I'm sorry.
I own Truist, actually.
Joe T, you own PNC. I apologize. Looked down at my notes, looked at the wrong name. Joe T, coming to you. PNC teaming up with Coinbase to give clients some crypto access.
PNC, USB, we call these names super regionals.
Yeah.
And candidly, I have a degree of disappointment. I've expressed this over the last several weeks in the way that regionals are trading. It's really idiosyncratic. You have certain instances like a Huntington Bank or a Regions Financial, where Citizens is another example where it's trading well, and then you have other instances where regionals are not working particularly well. Not particularly excited about what I've seen over the last year from PNC. I think it's up somewhere around 11%. You could lump USB in there as well. I think the money center banks is really where you want to find the opportunity right now. Wells Fargo, on a valuation perspective, obviously attractive, but it's also had relative underperformance, and you will get that mean reversion at some point. So I think you could trade higher up. You don't have to go to the regionals, the super to regionals just yet. Stay with the money centers.
All right, speaking of Josh, you own JP Morgan, just your broad take on the financials right now. We're starting to see that deregulation story kind of play out. Again, Goldman looking to acquire potentially Northern Trust, Huntington Bank last week. I'm sure there's some other acquisition targets out there as well.
So the deregulation story is like the climate. Like it exists. And it's a different climate than what we experienced over the previous 4 years. And, you know, it probably in the background has helped people feel a little bit better about, you know, buying some of these wealth managers, asset managers, money center banks at a elevated price to book, let's say, over what they would have paid 5 years ago when they were being regulated like utilities. So now, like, there's a little bit more slack in the reins. I don't know that anyone could directly point at any specific financial stock and be like, oh yeah, deregulation is good for 20 cents per share in earnings for this company next quarter. I don't think it's quite that formulaic. I just think it's the climate, like it's the atmosphere, but it's helpful. It's a tailwind because, look, you think about the growth of, just as one example, private credit, like market making is another example. These are areas where the largest banks were told by the government, we don't want you there anymore. We don't want you doing this. So now the banks have been reduced to doing originations and turning over the lending business to Blue Owl or somebody else. And it's not that that's necessarily negative per se, but it's definitely held back the potential earnings power for these banks in what would otherwise be a roaring bull market. You've got stocks at all-time highs. You've got more millionaire households than ever, multi-millionaire households, explosive growth in 401k balances. You've got the middle class leveling up in their spending, which helps credit card companies. Like, these stocks have done well, but I would argue in this environment, they should be doing better. And some would say the next catalyst will be the first rate cut. Okay. Maybe, gotta wait till September. Maybe that's true. But these stocks are doing well without them. So I like what Joe said about Interactive Brokers. That's on my best stocks list. I think that's going way higher. Just looking at the way Schwab and Robinhood have been treated, I think that stock should get a bigger rally. And there are tons of those stories everywhere I look in the sector. So I think it's gonna continue to work. I think you wanna be in financials into end of the year.
You know, to your point, the CEO of Interactive saying he sees another 2 or 3 years on the rally, I believe. Kate, I want to come over to you. By the way, Citi hitting a 52-week high, talking about these big banks moving higher. Just
Is she allowed to comment on that?
I'm not, but I think I'm allowed to smile.
You are definitely allowed to smile.
Yeah.
And by the way, talking about deregulation, we had the Treasury Secretary also talking about deregulation, saying the capitalization requirements are unnecessary burdens on financial institutions, talking about he wants to see more growth in the finance sector. So just talk to me more broadly about financials. And we see some people talking about some of the trading houses like an Interactive and a Schwab. Then, of course, you have the big banks and the regionals. Is there a certain area that you see as the most attractive?
Look, I think there's a lot of very strong stories across the entire sector. We've highlighted a few of them across regional banks, across some of the money centers. I think the important point here is that it has been an unloved sector for a considerable period of time. It has not been any place anyone's been taking big concentrated risk. They may pick a name or two here and there, especially for the active managers. But in general, it hasn't, occupied the space of being a consensus overweight. I will suggest, looking at the sell side strategists, looking at recommendations, it is a consensus overweight right now for the reasons we're talking about. A stable economy, maybe not explosive, the likelihood of future rate cuts, the expectation that the curve is going to steepen and that the deregulatory story is going to be this tailwind for earnings. So I think it's reasonably well owned. This is why I pointed out before that we need to watch the price reaction. I will tell you, I was at a conference about 10 days ago, and it was a small group discussing their highest conviction calls. About half of us pitched regional banks. So I think that's a little bit of a warning sign in the near term, even if there are structural reasons to consider this sector as more of an anchor to portfolios today than it's been in the last 5 years.
I think what the regulatory relief does is it unlocks capital for M&A and for capital allocation strategies. And I don't think you dismiss this report this morning that Goldman Sachs is looking to make a big acquisition. Goldman Sachs isn't, I don't think, looking to make that big acquisition in the prior 4 years. I think this is something that is going to be rather popular in the financial services industry, where we're going to begin to see tie-ups that previously were never thought of.
You're going to see M&A, but you're also going to see more loan growth. This is what Jamie Dimon has been complaining about since 2008. The restrictions on capital, when you loosen that up, you can lend out to small and medium-sized businesses, and that's really important for the economy as a whole. So not only are you going to see buybacks going higher, which we are, and we're seeing a lot of very different shareholder value creation, but I think loan growth is really at the heart of this whole thing, and that's important.
Well, the buybacks, yeah, that's going to happen. But higher loan growth in a slowing economy, you see the two things happening at the same time?
I don't really see the economy. It's slowing, but it's still strong. It's above trend. 2.5% is above trend. Trend is 1.5% for this economy. So deregulation, lower taxes, CapEx cycles going higher. That's not going to lead to a 1% economy, 1.5% economy. I think it's going to stay strong, and I think they are going to lend, and that is something that has been missing from the banks over the last several years.
All right, let's switch gears, going over to tech. Let's put up an Alphabet chart. If you look at Alphabet today, if it's higher today, it's on pace for a 10-session win streak. It'll be its biggest win streak ever in the history of the stock, so just kind of holding on to gains right now. Surprisingly, nobody owns it, but Josh, I'm going to come over to you. Is this rally really hinging on these big tech earnings? We got Alphabet tomorrow. I'm just going to look at the numbers very quick. The cloud business is expected to grow by 27% year over year. The ad business by 7%. Is that realistic? And even if it hits it, does it have to blow it out the water or just meet it to keep this rally going?
I think it's realistic from the standpoint that at Alphabet, they have a lot of different levers to pull in different areas of the business. And if they feel that this quarter, it's really critical to report a certain metric, they'll find a way to do it. And I think so I exited Alphabet earlier this year, took a profit after having held it for a long time. And my big idea in doing that was that, I've got tons of exposure to mega cap tech as it is, and I felt that other companies were better positioned. And, one of the things that they're going to have to accomplish on this call, which I think is more important than any specific number outside of the earnings per share number and the guidance, is they're going to have to get everybody on the same page in sell-side land about their AI strategy and their ability, believe it or not, to compete. And as we've talked about on the show, Frank, this is something that Alphabet shareholders have never had to worry about. They had plenty of things to worry about, but competition wasn't one of them. It's a company that had 90% of their market forever, since before they came public. So that's kind of what I think people, whether they're long the stock or looking to put on a new position or nervous, that's what they want to hear. They want to hear about the query results when Gemini takes over from where a search result used to be, and how are we going to replace the revenue from the blue links now that the consumer has grown accustomed to a new way of search. They don't want Google to tell them which website to go to find the answer. They just want the answer. I think Alphabet has the potential to figure this out and not cannibalize their traditional search revenue. And that's what you're betting on if you're buying the stock here at 190. We don't know for sure. So people are going to want to hear that they're holding their own as the consumer's behavior fundamentally changes for the first time in the history of the internet.
Kate, coming over to you. Does this rally hinge on big tech earnings? Does it hinge on Alphabet tomorrow? We saw last week Netflix did better than expected, gave better outlook, and it moved lower. Do you think we're on pace for a similar setup? I'm not asking you to ask about the actual company, but a setup where good's just not good enough, and then does that change the rally's trajectory?
I think big tech has to put up good numbers. That's necessary, but not sufficient for an extension of the rally. So this is what I would suggest. Big tech is kind of table stakes at this point, beating expectations and offering solid guidance, basically saying, you know, regardless of what happens in terms of the economy, we have stable earnings. We're going to continue on our trajectory. That's the message we need to hear. I got to tell you, the thing that I'm really watching as we go through the balance of earnings season, so this week and next, really, is what happens to discretionary stocks. This is an unloved part of the market. And if we get better news, whether or not they're handling the margin pressures from tariffs or that they're getting actually solid, like we saw in retail sales, activity from the average consumer, I think that will go a long way to kind of supporting the market.
All right. And welcome back to Halftime. We're back with Josh Brown's best stocks in the market. Josh, you want to focus on two names that are actually in danger of falling off your list.
Yeah, as Joe Terranova would tell you, the number one factor performance this year is momentum. Better than value, better than dividend, better than growth at a reasonable price. Just far and away, this has been a momentum market really since the jump. And as a result, a lot of the names on my best stocks list have been huge winners, but not all of them. And not every trade goes right. And I wanted to use this as a teachable moment because I have a couple of names that are in danger right now. One is called Expand Energy, and the other one is called Deere. And the important thing here is one of the number one mistakes I see investors or traders make, and this is throughout my whole career, buying a stock for one reason, it goes against you, and then coming up with new reasons to not take the loss. It's just like the absolute kiss of death. So you'll see people say, I bought it on the technicals break down, and then they're like reading through an 8K. And it's like, what are you doing? So here's what's going on here. Expand Energy is a U.S. energy producer. It's not been a good sector, but this was one of the better names. It may be stabilizing here, but the stock is now below its 200-day moving average. Natural gas prices are negative 15% over the last month. Crude is negative 5%. These stocks just can't hold up in that kind of an environment. And so you see that across the sector. For investors, I might be tempted to leave it on the leash because it looks like it's finding support here around this $100 level, and it's found support here twice earlier in the year. For traders, when we put up these columns at CNBC Pro, we're already telling you, here's where you're wrong. Here's where you might want to exit if you're a shorter term trader. And those people should already not be in the name. So I'm just highlighting this as an example of when a best stock becomes just a mediocre stock. And it happens all the time. We never assume they're all going to work. I'll do Deere quicker. Sorry. Deere still deserves the benefit of the doubt. It hasn't gotten anywhere near its rising 200-day moving average. And this is a really big stock, and it tends to move a little bit on the slower side. So I would take this pullback with a grain of salt. I would not overreact to it. The company will report on August 13th before the market opens, and I would stick around for that report. The last time they reported earnings, Frank, the name hit $528 a share. Huge day. And I know tariffs are a concern here, and that's probably explains the short-term weakness. Deere is very good at managing supply chains, and I do not think that's going to take this thing down when they report. So that one, it's in danger, but I would still stick with it as an investor.
All right, Josh Brown with the take on his best stocks in the market, Expand Energy, formerly Chesapeake Energy, and also Deere. Josh, thank you. We appreciate the courtesy. And we are back. Let's get to some more committee moves. Steph, you're making two moves. You're actually buying Freeport-McMoRan ahead of earnings.
Yeah, so I bought Freeport back and I sold Diamondback Energy. I just like copper market better. The inventories are at record lows for copper, and every 10 cent per pound change in copper is $200 million to Freeport's EBITDA. So I think that there's a lot of upside. Copper prices are up about 25% year to date on better demand and electrification, that whole theme that we've been talking about. So it's trading at about 6.3 times EBITDA versus 8.9 times historically. But if it's down on earnings for whatever reason, I'll be buying more.
All right. I mean, copper prices are up 13% just this month.
No, I know.
Again, on the tariff announcement. So do you see potential for a big pop because they might raise guidance, as you just mentioned? They have like a big multiplier effect every time copper prices go up? up.
And I think long-term, copper sets up very well, much more so than energy. We have a lot of supply in the energy market.
And Freeport-McMoRan, you're also benefiting from the price of gold moving higher as well.
Right. Any thoughts, Josh?
You know, this is not really my favorite area of the market, nor is it anyone else's, but this chart looks great. I think Steph's going to make some money here, and I think you can't ignore the correlation between this and global stock markets around the world rising. I think it's a signal of increasing demand relative to what we had expected even 6 months ago. The world is booming. You will see increased copper demand.
All right, Freeport-McMoRan share is up over 2% right now. Stay with us. Final trades, they're coming up on halftime. You don't want to miss it. And we are back on halftime with final trades. Downtown, Josh Brown, you're up first.
I have to report a breakout in progress in a name I am long, Rocket Companies. Value Act Capital has just raised its stake to 8.9% of all shares outstanding over the last 2 weeks. They have bought 2.9 million and change shares at prices from 13.5 up to 14. Resistance in this name has been right about 15.5, 15.75 all year. It is now trading through that level. I'm holding my position. I don't know anything more than what's being reported, but this stock is under accumulation.
Kate.
I'll go fast here. I'm long volatility into the end of third quarter. I think we're likely to see some spiciness in the market. We talked about positioning, seasonality, but I also just want to highlight that tariff threats are not over, and I think that's likely to cause some indigestion.
Steph.
Toll Brothers.
Joe.
Fast and all, and I like Kate's trade.
All right, that's going to do it for halftime.
That was Josh Brown and guests once again on the Halftime Report. Today it's Tuesday. It's July 22nd. It's almost 4 p.m. It's 3:57 p.m. as I'm recording this video. Market's about to close. You can see the seconds ticking right there. And the S&P 500 up, well, not that much. But here's what we're going to cover in this video. We're going to go over the indices like the SPY, the QQQ, the Dow, the European ETF. We're also going to look at about, are you ready? 21 stocks and ETFs here that were actually talked about on the Halftime Report today. All right, there's a list. Not all of them, okay, because there was a lot, but we're going to cover a bunch. The ones that are not covered are probably in my portfolio also. And then also Mag 7 stocks, Tesla and Apple, will cover those as well. Let's go ahead and take a look at the markets right now as we speak. As I said, the markets haven't closed yet, so these numbers are going to still move. You can see it's 3:58 p.m. Dow looks like it's going to close close to 0.48%. The NASDAQ down 0.28%. The S&P 500 up 0.16%, and the Russell 2000 up 0.91%. It's up the most, actually. If we look at the heat map, we've got NVIDIA down a little bit today. It's down 2.40%. Broadcom's down 3.2%. Some of the semiconductor stocks that you can see right there are down, but Apple is up. It's up 1%. Google's up 0.62%. Tesla up 1.29%. The healthcare stocks did really well today. You can see the green there, and the financials did pretty good too. Utilities did really well. Real estate and basic materials. And let's look at the sectors quickly. See which ones were the top performers today, and you'll see that basic materials, okay, healthcare and real estate, there they are, and utilities, they were up the most, up over 1% today. Technology down 0.93%. Communication services down 0.24%, okay? So let's get into the stocks. We're not going to spend too much time. We're using the Ichimoku indicator, folks. The Ichimoku indicator. It's a beautiful indicator, I promise. What we've got here is price. We've got the 9 period, okay, which takes a midpoint of the last 9 periods and plots it right there, the green line. That's called the Tenkan-sen. You'll hear me calling that Tenkan-sen. This here's the Kijun-sen, the red line, and that's the 26 period, midpoint of the last 26 periods. The white line is the Chiku span, and that's the closing price projected 26 periods into the past. We want to see where that line is in relation to the candles 26 periods ago. If it is above, it's bullish. Then you've got the Senkou span A, which is derived by taking the 2 moving averages. If you look at the midpoint of those 2 moving averages and you project that 26 periods into the future, that's where you will find it. Then you've got the Senkou span B. That is actually derived by taking the midpoint of the last 52 periods. Okay? In this case, it's weeks that we're looking at. We're looking at a weekly chart, so it would be the last 52 weeks, and then it plots that into the future. Okay? And that's kind of unique. So like it gives us unlike these moving averages that plot right under the price, the 52 period midpoint plots into the future, 26 periods. And so it helps us to kind of get a little bit of an idea. It's a very unique, we want that single span A there to be above the single span B. Okay, the light blue colored line above the blue, that's a bullish cloud. If it's not the case, like back here, you can see the light blue colored line was under, that's bearish. You get the 200-day moving average here. All right, that's the dotted yellow line. So price is above. And then we've got the directional movement index. We want the green line above the red line, and we want the white line to be moving up like it was over here. You can see that. If we go straight up, you can see that led to a nice, beautiful move up. All right. When the white line starts to go sideways and starts to decline, that means that the momentum starts to come out of the trade like it did right there and pulled back a little bit. Doesn't mean it's the end of the move, because it could certainly continue moving up. All right. But I'm just saying that's what you're looking for. Okay. Now that we get that out of the way, let's go ahead and look at we'll start off with the SPY, and we're going to switch it over to the daily chart. And here we are. We're still in a very strong uptrend. As you can see, price is above the moving averages, above the cloud. It's still moving up. It's up now just 0.01%. You can see we just closed. It's 4 p.m. now, so it's up just 0.01%, the SPY. Not a big move up today. The QQQ ETF, even though it declined 0.52%, it did hold up above the 9 period, and that's really important, right? Because it can sometimes, if it drops under, it can lead to a short pullback, sometimes a much longer one. You never really know. Sometimes, like it did right here, it gaps right back above, okay? But the strength is still in this trend. What about the Dow Jones? Same thing, okay? It's up 0.34%. You can see it's holding up right above that 9-period moving average. And notice how it's contained, right? It's contained above. FEZ, which is the Euro Stocks ETF, that's in between the two moving averages, okay? And it's bouncing off the cloud right now, so that's good. It's staying above. That's all we need to see. It gives me a little bit of hope that this will continue to move up. I don't currently have a position in this ETF, but I'm just saying it's like still, relatively strong. If you switch it over to a weekly chart also, it's going to confirm that, yes, this is a strong uptrend on the higher time frame as well. And my recommendation would be, when you're looking at stocks, always look at the weekly and the daily charts to get confirmation from both time frames. You'll have a higher probability as far as the success ratio. Look at the Bitcoin ETF, IBIT, up 2.25%. So yes, it pulled back a little bit here. You can see when it broke through that little, symmetrical little triangle there, it dropped just slightly under, and then of course, there's the support level, the Tenkan-sen, and then now it's bouncing back up. What about Russell 2000? Today was a big day for the Russell. It was up 0.82%. It's holding up above the moving averages on the daily. However, with that said, it does not have a blue flag here, because if you look at the weekly chart, it's still inside the cloud. It has not popped through yet. Finding resistance. I think the August 1st date is the date you want to watch for. Really important date for the Russell. Why is that? It's because we'll have more clarity in the tariffs. How about the VIX? The VIX down 0.90%. Okay, that's good. We want to see the volatility coming out. But, again, that could spike at any time. So just keep an eye on that one. All right, let's look at the stocks that they talked about. Here's Fastenal Company. I've highlighted with a little blue flag the strongest stocks from that 21 stock and ETF list. And I put the weakest ones here at the bottom. And basically what I'm looking for here with these stocks is the weekly and daily time frame to confirm. So we don't really need to look at the weekly chart on these, because I've already double checked it. Fastenal Company looking very strong here. Very strong uptrend. Next earnings are on October 10th, so this still has some potential here. It's getting a little extended from the moving averages, but still strong uptrend overall. Then you've got Open Door Technologies Inc. was talked about on the show. Not something that doesn't look that, even though it's taken off, once it broke above that Ichimoku cloud right there, and that happened back on August, when was that? Sorry. No, it was on July 15th. Sorry, I was looking at this up here. August 5th is the next earnings date. So right there on July 15th, since that point, it's actually moved up. Are you ready? Well, it went from like $1 up to $2.88. So it's moved up 187.06% in that short period of time. This is a very risky endeavor to get into. As you can see, it dropped. So anything that goes up that quickly can also drop very quickly. And it was down 10.28% just today. This is a daily time frame. If you switch it to a 5-minute, you can see what the 5-minute looks like here. Down under the candle, under the Ichimoku cloud all day. It started happening yesterday when price got under the Kijinsen. See how the Kijinsen was holding it on the 5-minute there? And then once it got under there around 3:05 p.m. on Monday, July 21st, it was pretty much from that point on, it dropped approximately, as you can see there. Actually dropped from if I measure from here, where the Kijinsen is, for example, and I measured just that point from to today's closing price, a 35.69% drop, okay, from yesterday. That's huge. That's why you have to be very careful with these low-priced stocks, because they can, they'll do a number on you and your portfolio, especially if you have a lot of money in them. SPHB, Invesco S&P 500 high beta portfolio on the daily chart is still in a nice, strong uptrend, okay, and on the weekly chart too. RKT, Rocket Companies, they talked about that. That jumped 6.45% today. It looks like it's going to find some resistance, though. Let's take a look at this one. Hold on. Yeah, you can see this prior level of $15.90, and it did close above it. But wait a second. There's a high right there. Let's see what that high is. It's $15.98. All right, let's fix that. There we go. Okay, so it's still technically by 2 pennies closed above it, but look what happens. You see that long wick at the top? That represents selling at the end of the day. And I can tell you, I can showcase you that by looking at the 5-minute. All right, so it moved up, and then you can see from that high there at around 9:45 a.m. today, it dropped about 2.35%. I mean, it did start to move back up again on the 5-minute, but not something I would be jumping into quite yet, because it needs to prove itself still. Yes, there's some high volume here. Yes, it's looking very bullish, but why did it stall at that $16 level? And why did it develop that long wick at the top? That's a bearish candle right there. XLF financial stalling at 52.63. All right, still that's financials. SEHW stalling at still at that 90. It's under the 96.24 level, and that's a weekly level, by the way. That goes back, folks. It goes back to when? Back to 2022, February 2022. So you can see it's stalling. Charles Schwab, like I said in the previous video, wait until it breaks and closes above that level. This is a strong level of resistance. So I like to utilize not just the Ichimoku, but also prior levels of resistance to help me identify when it's the appropriate time to consider adding a position. Now this one here, Interactive Brokers, as you can see, it actually got above a resistance level of 59.13. It happened right there. It stayed above that level, and then it gapped up and then pulled back and found support at that level. It bounced off of it and closed right above the 9-period moving average. So this is looking very strong. I like Interactive Brokers. On the daily chart, here it is on the weekly chart. What about NTRS? They talked about Northern Trust Corporation. This one looks pretty good too, holding up above the Tenkan-sen. PNC Financial Services, that looks good too. I like that one. And if you look again on the weekly charts, above the cloud, so everything's good there. FCX, Freeport McMoran Inc., Copper. This one here also popped back above the Tenkan-sen, giving a nice little buy signal here. Here it is in the weekly chart, just barely above the cloud. I would hold off on this one because it doesn't look like it's a definitive candle that has closed above the Ichimoku. I'd wait until Friday closing time around 3:30 or so, 3 p.m. to figure out whether this makes sense. Because right now, it's hovering right at the cloud, and if it stays inside the cloud, that's not really a bullish place to be. KRE is also, whoops, there we are this is the weekly chart. This one is holding up above the cloud. Here it is on the daily chart. I mentioned that this was a bullish inverse head and shoulders pattern. All right, and so I talked about that in a previous video. How do you identify that? Well, okay, it's real easy. You just look for a bottom. So here's the head right there. There's the shoulder. Whoops. The shoulder would be right here. And then your next shoulder would be right here. Okay, it's inverse. And so that's bullish. And once it breaks through that level right there, then it's, as you can see, it's taken off. I can show you that on the patterns cheat sheet, which you can also find on my There'll be a little recording at the end of the video, folks, that you can find. There's the where is the inverse head and shoulders? Right there. Let me zoom in on it. So what I just showed you was the head, the shoulder, the other shoulder, breaking through what's called the neckline, and then so it's looking strong for that. That's a nice pattern. It's a very bullish pattern. Okay, so you can get this that cheat sheet that I just showed you along with a candlestick cheat sheet that I have on my Twitter page, and there's going to be some instructions at the end of this video on how to do that, along with becoming a member if you're interested in becoming a member, so you can get access to the members only videos that I produce just for members. If you become a Blue Cloud Trader or Blue Cloud Legend level member, there'll be all that info at the end of this video. JP Morgan. This one here is a position that I held from May 13th until June 30th. I always share on the day that I close the position or enter position with Blue Cloud Legend level members. So consider becoming a Legend level member. I closed out right here. I made an 11.3% return on that trade. Since then, it's moved a little bit sideways. It's still now currently above the Tankinson. All right, but I would probably hold off until it gets above that prior high there again, because right now it's kind of stuck in this consolidation stage. What about KBE? KBE is also in a consolidation stage here. And that's also, I see another inverse head and shoulders. I don't know if you can see it. There it is. Okay. And there's the neckline right there. And there it took off. What about Citigroup? Citigroup looks nice. Here's another one that I had a position in. This one actually pulled back. I got out here. I didn't get back into it. This would have been a nice place to get in. It's moved up since that point about 3.7%. So I like this. This stock looks good. EXE, this one, no. Okay, so I would not add a position here. Why? Because it's under the cloud, and I just kind of skip those. If I see a stock that's under, I know it's in a downtrend, and it's not something I'm interested in. HBAN, this one is above the cloud. It's in between the two moving averages, so I would not be adding until it gets above the Tankinson. If you look at you want to look at the weekly doesn't look terrible, but yeah, not interested in that right now. Toll, which is Toll Brothers, now on the daily looks really strong. It just broke above the 200. It was up 8.55%, but why am I not that crazy about it? If you look at the weekly chart, it's still under the Ichimoku cloud, and so no on that one as well, because it's still technically in the downtrend, has not even broken above a prior high. What about AMD? AMD is inside the cloud, so no on that one on the weekly chart. What about USB? That one's inside the cloud, so no on that one. What about KSS? This one you can see was interesting because it kind of made its way all the way to the top of the cloud, found resistance right there, and then they just dropped it. Now that's a weekly chart that you're looking at. So let's look at this on a daily. All right, look at that big gap from that point to that level. It actually moved up like about 84.49%. Okay, and then it dropped. Okay, so it only had a 38%. So like it's not a candle that's really that appealing to me, even though it's up 37.62%. Here's what it looks like on a 5-minute. Let's look at that. So you can see a lot of volatility in KSS, Kohl's Corporation. All right, their next earnings are on August 27th. All right, so those are the stocks. Let's look at Tesla real quick. Tesla on the 5-minute. Well, let's go to the daily. Sorry. On the daily chart, it's above the two moving averages, but you've got the faster moving average still under the slower one, the Tankinson under the Kijinsen. All right. And so, yes, it looks okay on the daily. The problem is you see this extended trend line right there. It has not broken that yet, has not taken out that prior high. And if you look at the weekly chart, it's still inside the cloud. So no on Tesla. What about Apple? Apple is inside the cloud. No on that one. There's the weekly trend line right there that it needs to break through first. Here's a daily chart. Yes, it looks relatively okay on the daily chart, right? You've got all the elements of Ichimoku saying it's okay, but no, because of the weekly chart, I would not be adding. But that's your decision to make. Everyone makes their own decisions about trading. It's still under the 200-day moving average. It's still under this long extended trend line. You know, you're taking a gamble, basically. All right. And guys, that's going to do it for this video. Stay tuned now for some information about how you can become a member. And thanks for watching. I appreciate all of you. If you guys want to have access to this candle cheat sheet, as well as the patterns cheat sheet, this one here that has multiple patterns in here. You can get it for free on my X page right here, Blue Cloud Trading. You'll find me under the handle on Twitter of @BlueCloudTrader. All right. And then what you need to do is, once you're on the page here, go to the highlights tab here, and then just scroll down a little bit. And that's where you'll find it, right here and there. Okay. So that's how you can find it. And if you guys like the, the videos that I'm producing here on the channel, and you want to support the channel, one of the things that you can also do is when you're on the home page here, you can click on the subscribe button. All right. And then once you've subscribed, a new little thing will pop up. It will say a plus button. So then you can also subscribe to join as a member as well, if you choose to. And you can become a Blue Cloud supporter, and you can request a stock to be, or ETF to be analyzed on the show. Blue Cloud Trader, this is where you get access to the exclusive member-only videos that I produce, and I go over my entire portfolio. I go over the strongest stocks. And I actually provide 20 stock ideas for the upcoming week, every weekend, and that's really important because we're looking at the best stocks, that have excellent technicals on the weekly and daily time frames. And then if you want daily updates on my trades, Blue Cloud Trade, I do a post every day. And let's see, daily trade updates. There it is. Okay. There's also some day trading videos. You become a Blue Cloud Legend level member. So there's 3 tiers. You can choose which one is you're interested in. And basically, once you've become a member, there'll be a new tab that pops up right next to the posts. It will look like this, membership. You click on that, and you can access those posts. If you scroll down further, that's where you can find the member-only videos on my homepage. Real easy. Okay, let's get back